guys, Mubarak here of Penny Stock. In today's lesson, I'm going to teach you guys how to track pump and dumps and why they're so useful for you as a trader. All right? The whole penny stock markets are filled with tons of pump and dumps, and once you figure out how they work, you can actually, in a very legal and proper fashion, be able to profit off of them. All right? And the reason I mention that is because behind the scenes, with the people who are actually manipulating the stock price, what they're doing isn't necessarily legal. And so this video has nothing to do with anything regarding to that. However, the stock that they're influencing still has a normal trajectory that you can profit from. So in this episode, I'm going to be going over what a pump and dump even is, how it relates to you, and what's important to know about them. All right, so pump and dumps. Okay, originally, the terminology comes from what the stock price actually looks like. And it's very easy to depict, and you probably see it all the time, right? So you'll probably have a stock fluttering normally along, and then for some reason you'll see a massive gain and then a massive fall. And the interesting thing about this penny stock market is as you become more and more experienced, what you'll start to notice is that the same general ticker symbols or the same stocks tend to get these types of patterns of pump and dumps on a consistent basis. So for some reason, let's say the stock ticker FCEL, right? This is one that's been pumped and dumped for years. Like I've been doing it for the last couple of years. Every time I see a kind of pump come up and I'm looking at the right forums and stock boards that are controlling and influencing the price of the stock, I know that it's probably going to be a runner. All right, so first, let's go into what a pump and dump is, all right? So there's three parts of the pump and dump, just like pretty much any other trade. The first part is the pump. The second is the sell-off. And then the third, right, which kind of corresponds to the sell-off, is the dump. And so what happens is that basically a group of people get into the share, right? They own stocks of this company, and it's on the public markets, but it's a penny stock. So it might be on the OTC boards, it might be a pink sheet, and generally speaking, these types of companies are not required to disclose any of their financials. So these companies are very prone to being manipulated if that's what the investors or shareholders are looking to do. So in that scenario, say random ticker symbol, let's just use FCEL, right? Because it's a known pump and dump. So what will happen is the company, the share owners of the company that hold a lot of shares, right now it's trading at a very cheap amount, right? Say it's trading at $1, all right? And then up here it gets all the way to $5, and then it sells off back down to the, say, $1.50 range or something. Sometimes during the dump price, it actually goes lower. This is just a hypothetical figure for this, but this is generally the grand scheme of things and how these work. So what you'll have happen is the owners of the company will then work with some type of marketing firm or IR firm, and there's even been companies that have reached out to me and our team here at Penny Stock to do this, but basically they're looking for free. They're not for free, but they're looking for advertising. So what they'll do is that they'll say, hey, listen, I'll give you 10,000 shares, I'll give you 30,000 shares if you promote our company and post it around and hype it up so a lot of people buy it, right? And that initiates the pump, okay? So now there's a lot of hype being created about the company. Usually it's false because the company as a whole is just a shell, but in general, sometimes it can be a little bit real. But the whole problem with this scheme is that it's not like the owners of the company are intending to hold the shares long term for the growth and viability of the company. They're just trying to make a quick buck and a quick flip. So what will happen is that sometimes these pump and dumps occur in the span of a few days or maximum a few weeks. It'll get to that top share price because they have a ton of marketing going in and a ton of IR, which is short for investor relations, a lot of advertising going in, right? And then once it gets to a peak, because everyone's kind of been promoting it and referring it, then at that time, all the shareholders or the initial owners of the company will choose to sell at a profit, which leads to the dump in the price. Because when there's so many people selling and such a large amounts of shares being sold, like these owners probably have 10, 15, 20% of the company, so they might have millions of shares. And when they're dropping those shares onto the public markets, unfortunately, a lot of people end up in a loss. And this happens fairly quickly, right? This type of dump can actually end up happening within like a few hours max, really. It usually happens all in one day, and then the trickle effect will continue to linger over the next couple of days. But But that's generally speaking how it works, okay? That's the anatomy of the pump and dump and how it comes about in the stock markets, okay? So the key thing now for you as a trader is, again, the internal actions that those guys are taking might not be the best, but you as a trader, if you know when the stock is being pumped, you'll be able to ride the wave on the way up and then be able to sell at a good gain. And obviously, if you get greedy, then you're going to be in trouble. But you can lock in usually 10, 20, 30% profits and make a good return on your money. So then the key question just comes about is, well, how do I find these types of pump and dumps? How do I know when they're happening? Okay, and so there's been always kind of a change in the platforms and in the ways that these stocks are exposed. And that's because, generally speaking, these aren't necessarily the most white hat tactics of promotion and growth of a stock. So that's why this might change depending on when you're watching it. But as of today, 2020, you can tell that all of the promotions are usually shared here on this website called otcmarkets.com. And this site has really evolved over the last few years. It used to be a couple different other sites, but the owners kind of consolidated. And they're basically keeping track of all of the different promotional email chains and advertising campaigns and pump schemes that all of these stocks are running. So the more promotional campaigns that you see running against these stocks, the longer or the higher chance it will be of being a pump and dump. So that'll kind of give you, these sites, otcmarkets.com, is a great free resources where you can kind of check out and see what type of stocks are being promoted. Hope that makes sense. You know, the pump and dump is something that you're going to be seeing all the time. And when you're using the trading strategy effectively, you'll actually be able to make profits from it. So hope you guys enjoyed this video. Definitely would appreciate if you like and comment below if you have any questions. And also, we're always looking for more content to make for you guys. So if you have any questions regarding your specific trading, your investing portfolio, stocks you're looking at, anything in this realm, feel free to shoot it over to us at admin, that's ADMIN, @inpennystock.com. Thanks, and see you guys next time.